We out here. Looks like we have got a solid connection. Just double checking because I am, as I mentioned before, I've been adjusting the current VPN usage, trying to dial that in. It is a little bit tricky. In case you're not familiar with how that works, it can be very, very tricky. Thank you so much for being subscribed. If you're not already, click that thumbs up. What's it gonna hurt? Obviously, it's free. And yeah, if you're not already subscribed, there are huge benefits to being subscribed, having notifications turned on, and just being generally supportive and a good human being. I see Cliff BTC with the fire emoji in the chat. I'm going to go ahead and respond. Let's go. Proof of live stream, guys. Your comments are read by me, every single one, not just the super chats. So keep those comments coming. Really, let's keep the community thriving. And share the link while we are live. It does so much. It helps the YouTube algorithm to know that this is important media that somebody else would benefit from. So thank you in advance for sharing that. I will be interacting with you while I can complete setting up the live stream at this point. I won't be on camera for another couple minutes, so I apologize for that. But I have to get the rest of our content all lined up, and then we will jump straight into it. News, reviews, more. Our paper tracker portfolios, guys. What is the current state of mining profitability? We are the only morning show that gives you all of this and more. We were the first to do it. In fact, we were the innovators, resulting in imitators by other GPU mining channels. Imagine that. Yeah, imagine that. But here we are. See those view counts going up? Thank you so much for your support. Keep it coming. Do share the link. It helps. Every click counts, but you've heard me say it before. I think your click might count for a little bit more than somebody else's clicks. I don't know. Call me crazy, but I think yours is one of the most important. Already, and do be sure that if you are not subscribed with notifications turned on, that you make that change. I know it sounds weird, but that one little change makes such a difference. It lets YouTube know that you're interested in knowing when we're live on this channel. And because of the type of content that we produce here, because it is related to cryptocurrency, because it is related to occasionally freedom movements, or freedom of speech, freedom of code, right? Freedom of assembly, freedom of so many of sort of the American ideals, we do occasionally get our views suppressed, and we're definitely seeing that on the new home for Mind Your Biz, just as we did on the previous home for Mind Your Biz. So do turn on notifications. It gives you a fighting chance at knowing when we're live. So thank you in advance for doing that. Thank you for sharing on especially Twitter and on Reddit. These are the two platforms that matter the most when it comes to crypto content outside of YouTube itself. Yes, we do produce content for TikTok, and yes, that's been a good experience, but because I am not a 15-year-old girl shaking the goods, it has not been quite the same follower pop as others have experienced there. So yeah, did I just say that TikTok is for 15-year-old girls? Yeah, I did. I kind of did. Yes, that is my take on it. And if you would be so kind, definitely do smash the like button. And be sure that you don't stop smashing the like button. That's just it, right? If it's what's good for the goose is good for the gander. And if it's good to smash that like button, then keep on doing it. Gosh darn it. And it looks as though I have been logged out of YouTube. I apologize for that, but my analytics dashboard is no longer live, so I'm going to quickly reconnect that. Otherwise, I'm not able to read your chats from within my dashboard, so please do be patient with me while I re-authenticate. This is the crazy thing about these systems is that you actually can get disconnected on the one side while you're not disconnected on the other side. Very, very weird thing. But it appears as though our connection is live and our likes are coming through. Appreciate you being patient with me while we set up our live stream, and we are ready to get started. Welcome back to Mind Your Biz. My name is Seth, and you're watching our morning live stream. We've been consistently streaming on Tuesdays and Thursdays at 8:05 a.m. Pacific time. Why 8:05 a.m. Pacific time? Well, it gives you an opportunity if you're in LA to be able to watch this as you're on your way to work, or if you were on the East Coast, you're already at your first morning coffee break, or you've been able to get a couple of hours in at the office, an hour or two before. You can take a little break and watch this live stream. So today we've got so much to cover, so much by way of DOGE news. We've got VC news, we've got Bitcoin news, we've got Ethereum news, and of course, we're always going to be talking about the upcoming Ethereum merge and the prospect of seeing the Ethereum merge either affect positively or negatively, affect how GPU mining is running. So let's continue, guys, along that track, along that vein. And go straight into the Fear and Greed Index. Today, we've got a Fear and Greed Index score of 25. Scrolling on down, this is kind of consistent. We've been staying in that fear range for quite some time, and I think that this is normally a counter indicator. I'm going to briefly red screen you, not financial advice, but this is normally a counter indicator that just sort of tells us that other people are feeling fearful, so we can be maybe a little bit greedy in the way that we execute our trades or the way that we plan our portfolios, or we can, just kind of choose to buy up the liquidity that others are offering to us at a discount. This is an old school strategy, long-term strategy of fundamental investors like Charlie Munger, and it still works in crypto, right? Like if you just pay attention to when other people are, when there's blood in the streets, when other people are fearful, it should be enough of an indicator that you can probably do well. You can probably win when it comes to getting the trades that you want. Appreciate you in advance for sharing the link. I'm noticing that we started to get a little bit of good link propagation, but then things kind of scaled back. Your support is very important to this channel. It is extremely important as we're trying to establish the new home for Mind Your Biz, and your ongoing support, it means everything. So if you can share that link, it means a lot. Keep those thumbs ups incoming, and thank you again in advance for sharing this on Twitter and on Reddit. We are getting our views suppressed. That is happening. So you are one of the only ways that we can fight that. And it helps the most while we're live for you to do that during the live stream. So definitely thank you in advance for helping out in that way. But let's take a look at the current news cycle. We saw that people are kind of feeling fearful. Why is that? Well, top news is Polygon. Their leader, Sandeep Nailwal, has led a $50 million raise for a Web3-focused VC fund. And it's for Web3 startups. Primarily, it's, the Polygon ecosystem, because you have the founder, Sandeep, working with other Web3 founders, setting aside $50 million for new talent in the space to be able to create new Web3 technologies. So apparently Symbolic Capital, that's the name of this new group, is a $50 million fund. They'll be focused on these new Web3 startups. And apparently Kenzie Wang, the founder of Seri, has also joined in that round. Sandeep said, "The mission of my life is to get Web3 to the masses. That will happen only if we have pioneering, Web3 apps and Symbolic Capital has been set up to help those early-stage developers to realize their visions. Symbolic will offer a level of support to our portfolio companies that is unique. We built blockchain companies from the ground up and are intimately familiar with the unique challenges these projects face. For a Web3 token startup, it's not only about the product and product market fit, it's also about designing sustainable economies with pragmatic tokenomics, building passionate communities around your product before taking your token public, marketing across both Web 2 and Web 3 with a BD, ad, and so much more. So they're right. VC is necessary at times, especially in Web 3 with the sort of tokenomics of not having your own chain, but working on other chains and then working within these frameworks where largely your smart contracts. It's a system of smart contracts that builds kind of iteratively on top of Web 2. So it's a big deal. Very big deal to have VC capital, especially if you have a good team. It's worth making that change, making that sacrifice to possibly have equity and bring in partners early on. Now, I think it's kind of a tricky thing, right? We talk about the cypherpunk movement. We talk about not needing the assistance of other people, but we also see that people who were kind of, who at least seemed to be diehard cypherpunks early on, they've wound up also needing to have a day job. They wound up also needing to keep a roof over their heads while they continue to build the stuff that we like. So we've got to figure out, how do we keep crypto grassroots and also keep it innovative? Well, it does require funding. So if community can fund it, great. But if not, then how are new technologies going to be brought to market? Well, it does require some capital. So VCs they're a necessary evil. If you think they're evil, they're a necessary evil, especially in Web 3. So that's first off. But jumping back into our news segment, DeFi versus CeFi, decentralization for the win. The collapse of crypto shadow banks like Celsius has demonstrated just how problematic centralized, opaque finance can be, says Sunny Agarwal of Osmosis Dex. And Sunny and Osmosis Dex are pretty great actors in the space. Osmosis Dex is the primary DEX of the Cosmos ecosystem, if you're not familiar with it. But apparently, there's been an issue with Three Arrows Capital and all of the related lenders that were dependent on Three Arrows Capital to hold their funds. There's been a huge issue there. And this is a much longer op-ed piece. Definitely recommend reading that after it's placed in the comment section here. This is part of, I guess, the Cointelegraph, their magazine. So it is a longer op-ed, but the link to that will be in the description of this video after we finish live streaming. But we've got kind of an issue here, and I just mentioned before, VCs are necessary, but VCs create centralized financial choke points. They do create these bottlenecks within the decentralized ecosystem because there are fiduciaries, right? There are people who are dependent on getting their finance back out of an investment that they initially jumped into. So we got Cliff BTC asking a question in the chat, and I can possibly get to that later on. And I've mentioned that in all the previous live streams since we started on the new channel, the new home for Mind Your Biz. What I'm just going to ask in exchange is that you try to be supportive of the new channel. There were very good reasons for making this shift, and yeah, there's definitely a need to make this shift for the new home for Mind Your Biz. I'm going to leave it at that because I've explained it and explained it and explained it, and we'll just say again. We innovated years ago on the original channel, which resulted in imitation by other channels, which then got picked up in the algorithm, got swept up, where ours didn't. I'm tired of playing the YouTube game, so we're going to do it a different way. That's why the channel acquisition, that's why the original channel is the first backup channel. It's like they say in real estate, the best second home is your first home. Well, I think the best secondary channel for us is going to be the original channel. So that's going to be our backup channel that backs up to Odyssey and does all the other stuff that you expect a backup channel to do. And this is going to become the new primary channel for YouTube moving forward. We're already at that point where we're ready for monetization, where we're ready for verification, right, with YouTube's system. So again, if they want to make it that difficult to get to this point where I've been publishing for years longer than people who've already been able to get that check mark, I'm just done playing that game. I can say that very, very publicly. YouTube is not strictly a numbers game. It's also it's some other things as well. So I'm a little bit tired of that. But yeah, you can think what you want about that, but I'm tired of playing the game. Just tired of playing the game. So that's why the new home for Mind Your Biz. That's why the strategic acquisition of a new channel, and that's why we're publishing here moving forward. So If you like it, great. If you hate it, I mean, you know where the thumbs down button is. Go ahead and click either one, right? Like, here's the thing. I've done things that are popular. I've said things that are unpopular. And Cliff PTC says, I'll go look at other videos. This is where I found you. So something is working in your outreach. I appreciate that. Thank you so much for letting me know that it has been validated. There has been, again, YouTube is a weird game. It's a weird game, creating content for YouTube, and there's not just one way to play it. So that's why we're going this way. But yeah, anyway, I appreciate you asking, and it's a reasonable question. Like, why do a secondary channel? Totally reasonable question. I've gone over it a couple of times, and this might be the last time that I talk about it directly, just because I'd rather talk about the value-added content than talking about YouTube on YouTube. Like, isn't that weird? I think that's weird that we spend like half the time on this stupid platform that's centralized and stealing everybody's metadata and trying to harvest all this info about us, that we wind up having to talk about them. It's kind of a cult of personality, kind of cultish behavior, don't you think? That's what bothers me about the whole thing, is that it's just a game. It's a game that's designed only to let them win. That bothers me a lot. Anyway, the cypherpunk in me is bothered by that. But Decrypt Media has an article on Metaverse, the next 2 years and beyond. Creators and designers need tools to build evolving metaverses, like this other one, the first open blockchain dedicated to metaverse development. Okay, so this is clearly a sponsored post, but I liked the headline, and we're going to leave it at that. Let's pretend like it's not sponsored by these people and like I'm not giving them any kind of free PR here. But instead, what we're doing is just talking about how the metaverse needs tools and it needs builders. And we opened up the news segment of today's live stream by talking about how we do need VC funds. And we do need people who sort of fall into the traditional roles of tech startups that we saw 10 years ago or so, going into these spaces and building things, who might not know how to create a grassroots movement, but really do know their stock and trade, or do know their craft very well. So being able to get people in who know how to build, who understand the problem domain, and who can create solutions to address those problems, that's what we need. We don't necessarily need people who are really good at community management. That's awesome if you are great at community management, but there are plenty of projects that are really good at community management that wind up being rug pulls. So there is a balance somewhere in between. Decentralization is a huge problem when you have projects that come in who are really good at, vibing and community management, but then wind up stealing 8 figures worth of the treasury, or wind up rug pulling on their promises 6 months into development, and people say like, oh, well, how did we trust them? Well, it was a long game. It was a con game, right? They're con artists that waited 6 months to steal $5 million from you. I mean, by anybody's measure, a $5 million payout after 6 months of work in community management, it's a pretty good payday, right? So we see that over and over again in the cryptocurrency ecosystem. And so being able to see that there are people who are, public and who have fiduciary responsibilities, right? Who have people that they answer to because they borrowed money from them up front, that can be a good thing. It's not always the best thing, because the people who paid them occasionally have unreasonable expectations, right? And they do what greedy rich people do, right? They're like, well, everything needs to turn out the way I want it. We're going to have these very strict expectations. So it can be a difficult balance. But I'm just going to say, I don't think that VC funding is always a counterindicator. But I also don't think that it immediately means it's going to be a success, right? So you have to apply critical thinking to this stuff. You can't just say like VC always bad or VC always good. Anyway, back in the news cycle, Bitcoin Magazine has an article about how the largest Bitcoin ATM firm is going to go public. They're going to have an IPO and be listed on NASDAQ, right? Speaking of that fine balance between the cypherpunk sensibility, right, and decentralization versus the traditional systems that are centralized, right? So you're going to be able to buy ownership in what should be sort of public infrastructure for on-ramping new Bitcoin users, right? They can go to an ATM, put in cash, or a BTM, put in cash. Oh, and they even got the ticker symbol BTM. That's pretty amazing, actually. So an $855 million SPAC deal to get listed on NASDAQ. But these guys are going to allow you to purchase a piece of infrastructure by owning their company, right, when they go public. it's kind of an amazing thing, but it's also kind of terrifying, right? People talk about how DeFi, right, so-called DeFi and VC-backed DeFi is a problem for cryptocurrency. But what about this? If you're a diehard Bitcoiner, I mean, BTMs used to be the best way for you to stay decentralized and for you to stay anonymous in getting Bitcoin. But if it's from a publicly listed company, well, they're going to have to deal with KYC requirements and AML requirements in every single territory internationally where they do business. Like, what does that do to your worldview? Are you still okay? Are you sure? Are you still going to be all right? Because I think that there could be an issue there. All right, guys, let's see. Have you already subscribed? That's a quick question. If you're not subscribed to the channel and you are watching this as we're live, what are you waiting for? It's free. Thank you again in advance for being subscribed and for your support of the Mind Your Biz channel. It means so much, guys. And I know I have to flash that a couple times throughout the media, but that is just because of the game. The Deadwood is saying, good morning, Mind Your Biz fam. Hope you all have a day filled with smiles and green charts. Definitely appreciate that, the Deadwood. Thank you for coming on over to spend some time with us while we are live. And agreed, we're going to take a look at that Bitcoin chart in just a minute here to see if we do have green candles today. You know, blue skies and green candles, so to speak. That's awesome. Appreciate that. But yeah, Bitcoin Bitcoin ATM operator going public, I don't know if that's the best thing. I think we want them to be private, but they will get picked on by regulators the longer they stay there. Kevin Hawthorne is asking, how is the weather over there? I appreciate you asking, Kevin. And again, speaking of good people, Kevin Hawthorne is a great member of his community, so always appreciate that you spend time with us, Kevin. The weather's really nice here, but I'm going to be in Las Vegas over the weekend at NFT Las Vegas, the NFT Las Vegas conference. It actually has a very different name. I apologize. But there's going to be an NFT conference in Las Vegas this weekend. I will be moderating a panel or two and speaking on the main stage alongside J-Chains, Crypto Wendio, and many, many others who you know in that space who are very much NFT focused. So I'm excited about that. But in Las Vegas, apparently it's going to be over 109 degrees. So I am bringing the swimming trunks and we are hitting the pool while I'm out there over the weekend. It's just what you have to do, right, when the weather's like that. I mean, think about that. We're past the dog days of summer, but it's still over 100 degrees in Las Vegas. Yeah, desert weather confirmed. But yeah, I don't know if this is as cypherpunk as most people would like for their Bitcoin ATMs to be. I think Satoshi may be rolling over in his grave or in his sunny island retreat, wherever he is. But YouTuber BitBoy concedes defeat and drops the Atozi lawsuit. I wanted to bring this up because, again, I'll occasionally see people talk smack about BitBoy, and here's the thing: I don't fetch water or fetch wood or carry water for anyone, and I guess the same is true when it comes to the Bitcoin or the crypto creator community. But I've met Ben in real life. And he's been nothing but kind and uplifting to me. He's like a lot of other people who's trying to figure out how to deal with the YouTube games, the YouTube algorithm, but then also talk about something that he's genuinely passionate about, which is cryptocurrencies. So that's a hard thing to do because it's kind of a minefield. And he doesn't, I don't always agree with him on all of his picks. I'm, for example, not a big-time Cardano guy. I'm not a Cardano maxi by any stretch. I don't even hold any Cardano at all, and I don't really have a whole lot of faith in its roadmap. But he does, and that's okay. It's okay for us to disagree. And I'm not into XRP at all because I do believe it is the banker's coin, so to speak, but he does like it, and that's okay. It's okay for somebody else to have a different opinion. The only way that you deal with speech that you think is, not right, is incorrect, is to talk more, to have more conversations. And what I've found of Ben is that if I'm not rude to him, he invites me onto his show and we can have those disagreements publicly. We can talk openly about the things that we disagree on. And that's the most important thing. What frustrates me the most is when people say, start to throw allegations at people and say, you're a scammer and you're terrible and you do all the wrong things and you shouldn't be allowed to talk anymore. That's where I have a problem, right? What I've seen personally, witnessed of BitBoy, is that he's used his platform to help promote other people who say things that he disagrees with. So figure that one out. He brings on people who are Ethereum maximalists, people who are Bitcoin maximalists, people who are Monero maxis, or who are part of the Monero development community, if they're not complete jerks to him. It's really that simple, right? You approach somebody with an ounce of respect, you'll get some back. So I just don't understand it. But apparently the lawsuit has been dropped, but in my opinion, he kind of needed to do some saber rattling here. But there was a defamation lawsuit that was to the tune of $75,000. These kinds of things do decrease people's income when they're on YouTube. Again, been talking about the struggles of being on YouTube, which is so frustrating to me that we even have to talk about it. But the struggles of being on this platform and then having other people attempt to assassinate your character for no good reason, right? When they jump in and attempt to make things that much more difficult. Forever Metalhead is in the chat saying, hello, Uncle Seth. Hey, thank you so much for saying hello, guys. Thank you so much for sharing the link. This has been kind of a struggle recently this last week. It's almost as though YouTube figured out, they're like, oh, this person is starting to get love on the new channel. We need to shut that down. So appreciate you guys being here, being supportive, and right back at you guys. You know I love your face. You know you're the reason I make this media. But jumping back into this, guys, it's just part of the news cycle. I don't like talking about people that often unless I can be uplifting, unless I can have something that is true, necessary, and kind to say. So I don't know Atozi. I'm not going to say anything bad about Atozi. But what I am going to say is a sensationalist clickbait about like this person's a scammer. That stuff is just not. It's just not necessary. You don't need to do that about people, right? Like all it does is make you look like you're the YouTube equivalent of an ambulance chaser, right? Nobody respects people who make their entire identity trying to tear down other people's identity, right? We don't like these people in real life. These people get punched in the mouth when they're out on the town, right? That's what we do to people like this in real life. Anyway, I don't know this guy personally though, but yeah, I don't respect that kind of stuff. CryptoNews.com has an article about how Bitcoin and Ethereum are struggling to gain momentum, but Doge and Shiba Inu are rallying. Oh, no, we don't want your newsletter. Thanks. But Bitcoin, it spiked above its 21,000 resistance. Ethereum tested the 1720 resistance. XRP is struggling below 0.35, which is just fine, right? Like 35 cents in my mind for XRP. I think we're in good territory. People who talk about XRP 10xing, going to $10, right, or more, I'm like, okay, I just don't see it. I don't see the tokenomics working out. I don't see the volume supporting that, and I don't see the fully diluted value or the fully diluted market cap of XRP supporting that kind of pricing. So I really do think that some runaway event where XRP is worth tens of dollars or $100 each, like, nah, man. No, really, some of its best days are behind it. I'll put it that way, in my mind, for XRP. Doge and Shiba Inu are irrationally going up, because we could say the same thing about Doge and Shiba Inu, but here we are. The Deadwood says it's very rare to find folks that try to uplift those around them. That's true. That's true. Guys, and that's because it's hard to do, especially it's harder to do around a culture of toxicity where people in a given industry or a given community or a given neighborhood where everybody else is trying to tear others down. It does take additional effort when you reach out a hand of friendship and somebody else tries to like gut stab you, right? When they see that your hand is away from your midsection, right? They try to get a little shiv into your side there. So yeah. All right, crypto news, guys. That's kind of a high-level overview of the market right there. We'll take a look at that when we get into our portfolio. It's a little bit later on. Double check to see that. Huh. Okay. I've got a little bit of a technical difficulty that I'm seeing over here in my chat. I don't want to cut the live stream for that. I don't want to leave you guys in the dark here. So let's take a look at this really fast, guys. U.S. politicians' failure to report husbands' crypto trades branded disturbing. Disturbing? How disturbing? Is it disturbing enough that we're actually going to, I don't know, actually going to create, say, legislation that makes it a requirement for politicians to disclose their crypto holdings? Because crypto disclosures for politicians could be a very important thing sooner than later, as we know. Even transparent ledgers, right? Even public ledgers like Bitcoin and Ethereum, they can be made pseudonymous by creating a new wallet address. Like, problem solved, right? But if we know that that any kind of donations have been made to those addresses and they've been linked to the identity of a politician, that can be made completely public, and we can disclose that sort of thing. In my opinion, this would be a good thing. It's one thing to have, like, typical citizens have to disclose all their crypto holdings. It's another thing entirely, in my mind, to ask politicians to do this. I think it's totally appropriate to ask politicians to completely disclose everything that they hold or everything that's been donated to them by way of cryptocurrency holdings. But maybe you've got a different thought on that matter. Let's see. Forever Metalhead says, can't see why not be positive and try infect others with positivity. We only need to help each other. Everything then falls into place. I think you're right. It can be hard to do, though, right? As we know, it can be hard to do. And there are some days where it's harder than others. And that's what makes it special. Like you're saying, that is the kind of thing that makes it rare and makes it special. Deadwood agrees with Forever Metalhead. And hey, I can't disagree. I think you're totally right. I think it does matter. Like, kindness matters. Being just a genuine human being matters. But not everybody views it the same way, and not everybody is willing to play the long game of being uplifting. Sometimes it's easier to sell clicks and be sensational by calling people dumb, right? Or by telling people that whatever you're better than them in some way. So yeah, it can be a really tricky thing being above all that. But let's see. What do you guys think about that article, though? Let me ask your opinion on this, and I'm going to be just quiet for just a second while I wait for you to wait for your feedback on this article right here, because I do think it's important for us to have disclosures from some of these politicians, because we're at that point now where, at least in the state of California, it is totally possible to get to have your donations sent to people in public office in the state of California. But that was loud. But it is possible. Forever Metalhead says, "Oh, did Uncle Seth call me special? Oh, I feel nice now. That's great." Well, here's the thing. You are special, Forever Metalhead, just like everyone else. How's that for an uncle thing to say? Oh, yeah, groaner. Yeah, dad jokes. We still have them. We still got them. So I think that it's important for these politicians to disclose what they've been, at least what's been donated to them, right? Cryptocurrency investment holdings, I don't think it's maybe as important, but they do have to disclose their stock holdings because that is a regulated market here in the United States. I just don't think that's quite as important in cryptocurrency markets because it's not regulated in the same way. But that's our news cycle, guys. Let's talk about the cost to mine one full Bitcoin right now. Talk about our cost of production. We're here on the Brains calculator. Let me go to the 104 terahash mark right there and go to 3,500 watts because we're going to pretend like we have an unoptimized S19J Pro. And we're looking at the cost of production being $9,000. Nope, that's on 5-cent power. Good luck finding that. 8-cent power, I know you can find it in any state around the U.S. Any state of the union, you can find 8-cent power. We got 14.5 is your cost of production. Still not bad. I don't think we're gonna see Bitcoin much below that at a certain point. I think it's just going to continue. So, all right. Hey. But yeah, shouldn't dip too much farther below that. Apologies, I got DMs coming in. Work still beckons. But yeah. But we got 14.5 as the cost of production. I think that's totally reasonable if you're on 8-cent power. So I think that most people should be able to maintain profitability. And if you can float the full cost of mining your Bitcoin for a couple more months, who knows? Maybe we get through the eye of the needle. Maybe it is a question of only having that bottom support being sustained for a few weeks. But if it is like the last Bitcoin bear market, it might be a few months. So you'd have to plan accordingly. We see that a lot of Bitcoin miners are having to sell their Bitcoin holdings because of groups like Celsius locking up their former loans, right? So if you no longer have a Bitcoin lender that's available to help you make the most of the Bitcoin that you've mined by borrowing against it, then you're going to have to make some changes. Bum, bum, bum. All right. Oh my gosh, you guys, just feels like it never ends. Feels like it never ends. All right, so that is our cost to mine one full Bitcoin. But let's take a look at our Bitcoin chart. I think that's just as important. Right here, we got our mining chopsticks that are the chopsticks right here that have pretty much stayed consistent, I think, at this point. Redefining that downward channel and kind of showing that the tops and the bottoms are in line with this scaled out, or this zoomed out movement down. This is the point at which we knew things were actually going down, and that was the most recent bottom before it started going down. So I feel a lot more confident in drawing a line like this. Now, does that mean we're definitely going to see this kind of price performance? No, I do not offer technical analysis. I don't pretend to be able to tell you exactly what's going to happen in the future. I don't have a crystal ball for how the Bitcoin market is going to operate in the future, but I have a really strong suspicion that we have to see a full minimum 85% retracement from its most recent top before it recovers, so to speak, and then we start to see things move back up. That's historically how Bitcoin has moved. Now, does it mean it's definitely going to do that in this time around? No, it doesn't, because a full 85% retracement would mean we're somewhere in the vicinity of $10,000 or $11,000 Bitcoin. And for my part, I've said we're probably not going to see that. So that's my story. I'm sticking to it. I have a very strong conviction that we're going to see a manipulated bottom support somewhere closer to 12.5 and 14K. That is what I believe is going to be the long-term bottom support of Bitcoin. You got other people saying that quantitative tightening and that problems with inflation are going to somehow, and then of course the dumping of the Mt. Gox settlement are going to somehow bring us to like $8,000 Bitcoin or $10,000 Bitcoin. You got these perma bears that are saying things that in my mind just sound crazy. And I just don't think we're going to see Bitcoin get beat up that badly because we have too many institutions at this point that cannot afford to let it get to that point. And they will manipulate this price in ways that we cannot possibly imagine. And they have so far. That's why we didn't see, in my opinion, $100,000 Bitcoin at the top, because some of these groups said, oh, okay, there's finally enough volume. There's finally enough interest in this asset class that we can get involved. And so we've got to make sure the price stays right about, the sweet spot for us to get involved and get a bigger position into Bitcoin. Enter MicroStrategy, right? Enter BlackRock, enter all these other groups that are interested in doing so now. And what did that mean for the first comers into this space? Groups like Coinbase? It means they suffered because they didn't know how to manipulate those markets in the same way. So what did they have to do? They had to go public. What are they doing now? Coinbase is trying to offer a subscription model. You see where I'm going with this? These first, pioneers die, but settlers prosper. And all these old VC groups from the traditional markets, right, of fintech, they're settlers. They're not pioneers. They don't really take risks, not really. And the groups that early on took risks, some of them are pivoting enough, but most of them are not, and so they're suffering. Anyway, that's a long preamble for me to just say, I think that from a macro perspective, just zooming out, that there's a really strong case for a manipulated bottom, not the 8,000 to 11,000 that people are saying will definitely happen before Bitcoin recovers. I think we may wick down to those levels, but I don't think we're going to see long-term support at those levels, just support at the bottom of the range there. Got chats coming in from Latrell saying it never ends until it ends. Yeah, right. I see we've got the Deadwood here as well, BlackRock and EWT. Yeah, we've got these manipulators, right? These are serial manipulators of markets. They just kind of rinse and repeat. They move from one asset class to another, whatever they can get the highest return on, and but they have to be able to do so at a position size that makes sense for their business. And we're finally at that level for BlackRock to say, yeah, we can take Bitcoin seriously now. They couldn't do this 5 years ago. That's what I'm saying. They couldn't do this 5 years ago. They can barely do it now. And because they know they can come into this market now and really win without having government be too, what's the word I'm looking for here? Without government taking too big a swipe at their business model, I think that's why they're getting entrenched now, why they're digging in now, and why they're going to start leaning into the narratives of ESG and compliance and doing things all the right way. They're going to give all that stuff lip service until laws are actually decided about how they should be involved. But in the meantime, they will have positioned themselves to make a fortune, far beyond what most of retail is going to be able to do with their Bitcoin holdings, and they'll fool retail into believing that they have to only use the most tightly regulated forms of Bitcoin and other cryptocurrencies. So, I mean, it's brilliant. Bravo, masterstroke. They just keep on doing it. They keep on fooling people over and over again on different asset classes. But I think here in the Mind Your Biz community, we should know better. Right? We should know how to hold our own cryptocurrencies. We should know how to create a seed phrase from scratch. We should know how to have a hardware wallet set up. And that's my mission, is to make sure that the maximum number of people know how to do that. I don't want to shill you referral links to FTX and Femex and whatever other bat crap crazy centralized trading platform with leverage is going to come up next, right? These are all insane. It's insanity, and they keep on trying to peddle it to retail like it's new and like it's sexy and like you're going to get rich doing high frequency leverage trades. No, just stop doing it. Zoom out. Just zoom out with me. That's what I'm saying. But that's our chart, guys. I'm not going to change it really for anything because we readjusted those chopsticks. And what did Bitcoin do? Pretty much what we expected. Continued along a downward trend. Now, will it continue in this time frame? Maybe not. But I think we are going to see that 12.5 to 14K Bitcoin. I think that is going to be our bottom support ongoing. I think if we do see a melt up, great, good, awesome, exciting. But the highest volume in recent history has been on our red candle days, unfortunately. That's where we're seeing real volume. That's where we're seeing things actually move, is during sell-offs. And I think we have to see that again in the future until we get to a bottom support that represents enough value lost from Bitcoin that we can start the cycle all over again. Not a shocker, guys. You've heard me stay consistent on that opinion for a while. Over on txstreet.com, guys, this is one of our favorite tools for being able to show. We have maybe missing recent blocks. That's fine. What we don't have is we don't have an ongoing preset here. I wish that we did. Let's take a look at median contract fee. You notice right up here, we don't have in the browser bar, we don't have the ability to just define some of the parameters that we want to see there. It's all run in JavaScript in the front end. So unfortunately, we don't have the ability to just deter, like with a link, right, with a bookmark, decide exactly what we want to have represented here. But in the meantime, we are seeing a whole lot of activity over on Bitcoin, right? Take a look down in that low fee line. We've got thousands of backed up transactions there. Median sats per VByte 9.31. It's higher than it's been in a long time. So we are seeing real network activity on Bitcoin, but we're seeing that low price, right, be maintained very strongly at about 36 cents per transaction. Transfer fee on Ethereum is a buck, so it's still not bad if you're trying to right size your portfolio. Still a really good time for you to figure that out. We've seen much higher pricing for just transferring Ethereum, the core asset, Ether. And especially when it comes to contract pricing, we've seen much higher contract pricing in recent months. So it's a pretty good time to set things up. Less than $5 to execute an Ethereum contract. Not the worst. Now, I know this is going to still block some people from being able to use Ethereum. It's going to cause problems in getting people to be able to use Ethereum. But yeah, that's not an issue at all. Hey, I just noticed, and this has probably been here for a while, looks like TX Street is going to begin tracking Lightning Network. So there may be an opportunity to show Lightning Network transactions in the near future, but it's just not yet. So it looks like they are signaling it's something that they want to be able to do. I'm excited about that. I think it'll be really cool to track all the Lightning Network transactions and make sure that we get as much scaling as we've been promised by the core developers of the various Lightning implementations. That's going to be great. Let's go ahead and add something fun that we haven't seen in a while. Looks like they're adding Litecoin and Arbitrum. I don't think that I want to see Arbitrum transactions tracked here on TX Street. I don't know that matters to me quite as much, but I am going to take a look at Monero versus everything else. Monero Street. Well, hi, Monero Street. We can't tell where everything is. Don't want to see that. Don't want to see that. Want to see median transaction fee and want to see the median the median fee in nanonaros per byte, right? So there we go. Median transaction fee on Monero is a half a penny. Bruh. A half a penny to send a transaction on Monero that is fully private by default. Well, okay. I think I've kind of illustrated what needs to be illustrated there. DeFi Llama is showing us that Ethereum is still, of course, the king. This is not changing anytime soon. We can adjust all these options to bring it to make it more obvious that it's over 60% of the total value locked across all DeFi platforms and all smart contract chains. This is not news, but the big question that I think we all have is, what will the merge do to this market dominance? Will there be capital flight from Ethereum into other networks as we start to see problems with the merge? Now, I think I mentioned on the last live stream that I had some problems with the Guerli testnet using a service that I was trying to set up as a test bench, right, as a test environment for a consulting client. I couldn't get one of these platforms to work that I needed to get to work with the Guerli testnet that went through a pseudo merge. It went through a simulated merge with the beacon chain, with the testnet beacon chain. This is not good. I'm not happy with Ethereum right now because of that experience. It had me questioning intensely whether or not the services that we rely upon day in and day out will break, because they might break after the merge. We might have some problems. There will be some growing pains, and the fees won't go down. So the fees, as we see them right now, are going to maintain that level after the merge. The Deadwood comes in with a little comment about how he's teaching his 55-year-old neighbor about crypto, pointing him to research resources, presenting to a 3 to 5 year plan, as well as lifetime Bitcoin cold storage for his grandkids while learning charts and waiting. That's awesome. That is the kind of work that needs to happen. And then taking a look at some of the fundamentals, in my opinion, the fundamentals as opposed to the high frequency technicals. If you're focused on the technicals, you have a problem, right? You actually have a problem because you're going to do high frequency stuff and have short time preferences that get you wrecked and that cause you to give up. So we don't want to do that. We want to focus on the fundamentals. Zoom out, like you're saying, paying attention to charts, but also paying attention to world events, because they're going to affect Bitcoin more so than almost any other single element combined. These are news-dominated cycles. But yeah, Tron is in that top 5. So is Polygon and Avalanche as well, though there is some recent price downturns on these markets. Solana, again, right where I think it needs to be. If you're using Solana seriously, I truly feel for you. I don't think that's the best in your best interest to be doing anything on Solana, unless you're publishing something on Solana and you want to just try it out, or just kicking the tires on Solana. That's fine. But I mean, sheesh, it's been broken so much of the time. I can't see myself using Solana for anything in the future. I just don't trust it enough. And I mentioned this over on the Token Metrics channel. I will be republishing the interview that I did with Bill Noble over on the Token Metrics channel. I mentioned on that interview that I think personally, since Solana is basically a corporate VC funded chain, that it's essentially FTX chain. If we want to call it something, the way at least Binance Smart Chain was being intellectually honest about it and naming it after the exchange that sponsored them. If we just called Solana what it really is, if it were a race car driver and had a big old patch from its biggest sponsor, it would be called FTX chain. Let's just call it what it is. Call a spade a spade. That is FTX chain. And because it was created by these largely centralized exchanges and these VCs that back them, I think there's a fiduciary responsibility to get hardware wallet support from day one. Binance Smart Chain had hardware wallet support from day one. You don't hear about people saying, well, we had to restart the validator network on Binance Smart Chain. It's just as centralized as Solana. It's not as high performance, but it's just as centralized. And so because you have these VCs, you have this centralized group, like they made the right choice by choosing the EVM architecture. That gives you access to full hardware wallet support on MetaMask and on other related wallets. So I think that Solana had a fiduciary obligation to take the millions of dollars that they still have in their treasury that they launched with from day one to go and approach Ledger, Trezor, and all of the other hardware, the top incumbent hardware wallets, and say, hey, we want to work with you before we launch to get hardware wallet support at launch. Like, it seems like I'm having to work not to use my naughty language right now. I'm so upset at Solana over this because I think that they had all the means necessary to get hardware wallet support from day one. But instead, they choose to launch with only hot wallets, and so many people have gotten wrecked, not because of exchange hacks, but because of hardware or hot wallet insecurity on Solana. And then all the validator network resets, and then all of the other problems that they've had with growing in scale. Like, that stuff is all secondary. Security is number one. And if you're not secure, you got problems. Really close second to that makes me really upset at Solana is there is still no privacy protocol. For Solana, it is 100% tracked, 100% public, 100% of the time. You send your stuff to a centralized exchange. Okay, cool story. A decentralized exchange, fine. It's still a public ledger technology. Still a decentralized ledger technology. It's just public by default. There is no privacy protocol for Solana at all. And its top use case is non-fungible tokens, which by their very nature cannot be made private. You cannot have a truly non-fungible token and ever make it private into the future because it's a one of one, right? It's a completely unique item. Even if the collection itself is 10,000, right? Generative NFTs. The moment you send one of those special non-fungible tokens to another address, they are linked forever, right? Like you can't erase the transaction history because ownership of that thing makes it fully doxed. Non-fungible tokens are extremely dangerous in that respect, from a privacy perspective and from a security perspective. So I've got a couple of bones to pick with Solana, and in my mind, seeing it drop in the rankings is a very good thing. In my mind, it is the most appropriate thing. And one of the only reasons that I have strong vocal support for Cosmos is that it is taking some of that problem a little more seriously and solving some of that problem by having the app-specific chains like Secret Network, right, where they do have privacy as by default as a primitive on those chains. But yeah, I've got some problems. I didn't mean to digress here, guys, but I am talking about the stacked ranking. In my mind, when it comes to fundamental analysis, Solana is finally eating crap where it should be. Yeah, did I just say it? Yeah, I just said it plainly. I'm really upset. Those two things, security and privacy, totally lacking on Solana. And they've just proven that over and over again. The Slope Wallet incident just kind of proved that Solana and its handlers, FTX, that they should have done better, and we should be holding FTX accountable for the total lapse in security on Solana's launch. We should be. This is a publicly traded company. This is a public entity that was directly supporting a public distributed ledger technology that didn't create some kind of a security protocol from day one. Like, come on, dudes. Seriously? If this were, 2014, maybe you could get away with that. 2016, 2017 even, maybe you could get away with that. Today? Nah, man. Solana literally deserves to die. It deserves to go chain dead because of what they've done to investors. Anyway, but yeah, I'll tell you what I really think in just a minute. Moving on to our GPU mining portfolio. Oof. Rip your eyeballs. Apologies. I thought I had already made that change before. But guys, not a whole lot has changed. We're below the $2 mark for the top of the line RTX 3090 Ti. A little bit higher than the last time that we went live, but not that much. What does this mean for the average at-home miner? It means 14 cents per kilowatt hour. Ain't going to cut it anymore. Ain't cutting the mustard. So we'll use the same cost basis that we normally use for our ASICs. What? Did I just move the goalposts? A little bit. And here's why. Because 8 cents per kilowatt hour is achievable for you. I don't care where you are. You can find 8-cent power. And if you don't know how, I'm being dead serious. Hit me up on Twitter. Hit me up in DMs. Or maybe I'll just do a guide on like, this is how you find cheap power. Because if you're going to maintain your status as a GPU miner, then you need to correct your operations right now. You can't do what the other GPU mining channels are trying to get you to do because you're going to get wrecked. You're going to give up like they do because they always give up in the middle of a bear market. They don't know how to continue because they've never actually mined at scale, nor have they consulted large-scale GPU mining operations. And I usually hold that stuff close to the chest, but I'm at the point now with the Ethereum merge where I'm like, F it. We'll just help the homies. We'll help people on YouTube. We'll help you figure out how to actually get that done. It's not what I do full time anymore. I talk about, or I consult larger institutions and companies on blockchain infrastructure to solve the unique problems that they have, because there's just more money in that. Full stop. I'm not even gonna guys. I'm gonna be a lot more transparent about that sort of stuff. I don't talk about GPU mining full time because it's not the best financial use of my time, right? Like, there are people, and it begs the question, like, so what is the real product, and who's the real customer, and what are they buying when you find channels that only talk about that, and can they sustain that as a business model? I think I already answered those questions for myself some time ago, but I'm here trying to share what I can that is useful to you. All right. And I hope that counts for something, but let's readjust that cost basis to 8 cents, because you can find 8 cent per kilowatt hour power. I promise you can. All in 8 cents per kilowatt hour. You can find it. You just have to cross the train tracks, literally. Okay, that's all you got to do. Cross the train tracks and search for it. That means even your older GTX 1050 Ti's are back in the money. It means your oldest cards are not in the money, and that's fine. But some of your more recent cards, even the R9 Fury, are back in the money on BeamHash, ProgPow Z for Zano, some of these smaller cap gems that we talk about. Zano, I do think, is a small cap gem. Still, I do want to bring CZ, Cryptozoidberg, back onto the channel for an interview, because that was enlightening. You know, the very first public interview with the earliest so-called Monero developer here on Mind Your Biz. And I still feel very good about that. That's good use for my time, I think. And that's good use for your time. Tell me what you'd like to see, though, by way of privacy developer interviews in the near future. And if you want to put me in touch with a privacy developer in the crypto space, by all means do. It will cost them nothing to be on the channel, and it'll cost you nothing to like and subscribe when you see that content come out. That stuff, I think, matters. And that's the stuff that we're going to be talking about years from now. What was profitable to mine 3 years ago might not matter 3 years from now. But privacy projects that were involved in creating privacy 3 years ago that still provide privacy 3 years from now, that will matter. And I will die on that hill. So haven't changed, guys. Haven't changed my tune. But back at the top of the list, obviously, if the least profitable cards are profitable at 8 cent power, then the most profitable cards are more profitable at 8 cent power. They added a new break-even tab as well in what to mine. Way to go, guys. You're raising the bar every time that we check in. Oh my gosh, the retail price, even that has adjusted downward. You remember our last live stream, I mentioned, hey, if you really negotiate, you can get that price even lower for your RTX 3090 Ti's. I mean, that's what I'm involved in, and I mentioned that I would, right? For the kids' gaming rig, for my workstation, I'm going to be looking at some of these top-of-the-line cards, but not for mining, right? I'm going to use this as a qualified expense for my business, right? Not as, you know, I'm not going to go and foolishly take profits from mining before to tell myself that I'm reinvesting by buying the top of the hardware market. That's what people do who get wrecked. So you're not going to do that either, right? Mind Your Biz community, promise me in the chat, promise me you will not do that. You will not go out and get yourself wrecked by continuing to over purchase your hardware, telling yourself you're going to earn it all back, right? By mining with it. I would be very sad if you did that. But they've got this new tab as well for break-even point. Some of these are break-even much faster. The RTX A5000 clearly is not profitable, not break-even for over 1,200 days, over 1,300 days. Good Lord. Who would do that to themselves? But you go down the list, guys, and you know why I'm so happy about using some of these older cards. Well, let's see if I can get some validation for this. Get into the Polaris edition cards. They're not even listing it there. They don't dare list it there. You know why? Because I've been saying it for years. These are the cards you actually break even on in very low periods of time, very low time frames. They also don't dare do it with the GTX 1060 6 gig. You want to know why? And you want to know why the other GPU mining channels don't like talking about those? Because they're actually where you would have earned money. And I told you that on the spreadsheet that I made for you 4 years ago. You're welcome. Is this my day to rant a little bit? Yeah, it's my day to rant a little bit. I'm gonna hurt some feelings here. I'm not gonna make it personal. I'm not gonna talk about people personally. That's not helpful. I don't want to call anybody dumb. I'm just frustrated that for years you've had GPU mining channels who say, well, I'm going to go out of my way as a qualified expense for my business. What is their business again? What is it they're actually selling? They're selling clicks on YouTube to you because you're interested in GPU mining stuff. Because it's part of my core business, I'm going to buy some of this equipment. It's top of the line. It's top of the line equipment. I'm going to show you how to overclock it, that's useful information for sure. So they are trying to like add value to your life. And then I'm going to show you a referral link. I'm going to show you a referral link for the top of the line hardware at the top of the line prices, because they can't give you a referral link for Facebook Marketplace. They'll try to share that stuff with you, but they can't give you an affiliate link for Facebook Marketplace. They can give you an affiliate link for Amazon though. They can try to use some, for Newegg, they can join an affiliate program elsewhere. But yeah, that's been the business model. And I've seen some of these groups. Back in 2018, I got kicked out of some of these groups because they were upset at me digging into their profits by publishing information like that for free. So yeah, do I have affiliate links? Yeah, I've had affiliate links. And do I think that's appropriate? Sure, if you find value in it. I'm not trying to like crap on anybody else's business. But what I'm saying is, like, stuff like this, you got What to Mine failing to report on right here. These models in particular, because this is where all the alpha has been for years. For years. And the large-scale mining operations, they still have those cards in production. They're still trying to squeeze out, like pinch a penny and make it squeal with those cards. Heck, Bits be trippin'. He's still mining on 4 gig Polaris cards that he bought years ago. And in order to get more performance out of them, he's not only overclocking them, he's also putting them in single-phase liquid immersion cooling tanks. So kudos to Bits be trippin' for keeping it very real. But you'll notice he hasn't broken 100,000 subscribers on YouTube. He hasn't broken through all the performance metrics because what he's talking about by doing that isn't sexy. It isn't new. It isn't telling you how to get the latest and greatest and pay top dollar for it and somehow be smarter than other people by borrowing your way into prosperity or buying your way into prosperity. It looks an awful lot more like frugality and hard work. So anyway, there it is right there, guys. Top cards. Bummer. I really thought that they would be intellectually honest here. Hey, and the RTX 3060 LHR also right there, not showing. The 3060 full unlock. These are 2 other cards that I've mentioned that they would be really high efficiency models and they would be worth taking a look at. Oh my gosh, guys, it friggin' hurts to be so right all the time. I'm not even joking. Like, it freaking kills me. Oh, okay. So somebody asked early on, why the new home on YouTube? That's why. I think I just laid out the problems right there. When you talk sense to people, it's not sexy enough. It's not clickbaity enough. My gosh. Anyway, I'll get off my high horse now. It's unbecoming of your Uncle Seth. Head on over to our GPU mining portfolio and take things down a notch here. I know. Those are really great moments. I can probably post on TikTok or something. But yeah, the point is, whew. Yeah, portfolios, guys. Let's also talk some sense, but let's talk ourselves down off that ledge because it doesn't really matter, right? I mean, it in the final analysis, not 100 years from now, people are not gonna care. Whatever. GPU mining, guys. GPU mining. Flux is still top of the list as far as our long-term HODL strategy. If you wanted to do a long-term HODL strategy, I'm probably a little hangry, guys, too. That's the thing. If I'm being honest, probably a little hangry. I had myself some, coconut oil to start the day off because that's, as one does. Have your medium chain triglycerides, have your high performance diet, ate some branched chain amino acids in some fresh juice. Yeah, we're high performance here. I'm going to turn into a fitness YouTube channel any day now. Ugh. I've been avoiding that, frankly, for years. But yeah, Flux is still top of the list. It's the only one that's still in the money after that long-term HODL. Over the last 7 days, though, if you were doing high-frequency trading, it might have been your time. If you bought low on Haven, it might have been your chance to get out of Haven. Same with Zero, same with Ton Token. Conceal also not totally worthless, but it's going there fast. It really is. It's heading there fast. I would be very cautious about holding on to some of these. I'll call them more toxic assets. Conceal is circling the drain. Zero is not circling the drain, but Haven also has been circling the drain for some time. And it's sad to see because they have a focus on some privacy. You'll notice that is one of the common elements for a lot of these GPU mineable coins that I've kept on the portfolio is that privacy is it is a priority And I've continued to say that, right? That's been my consistent story on YouTube. So there you go. The Deadwood says, my Rottweilers love their coconut oil. Your Rottweilers are, they're smart, intuitive beings. In their own way, they're pretty smart dogs. Crafty, right? And tricky. You don't want to turn your back on them. You don't want to leave them bored. Same with Dobermans. But yeah, smart dogs. But moving back into the list, guys, Ergo, I'm starting to dig in more. Expect a deep dive very soon, probably this weekend. When I have some downtime while I'm in Las Vegas, I will be moderating some panels. I'll be speaking on stage. But when I have some downtime, I'm already earmarking the white paper and some other aspects of Ergo, the Ergo ecosystem, that I want to explore more deeply. I'm starting to take it much more seriously at this point. I am starting to look at it as a potential real successor to Ethereum in the proof of work space for smart contracts. I'm still concerned about its status as being dependent on the Cardano sort of mothership, but I want to explore that fully enough that I can properly review it. It's not, right? It's not sponsored time, so I have to make time in the margins when I'm not otherwise using my paid time for my consulting clients. But yeah, but you do have a commitment for me to do better on Ergo and do that proper deep dive. Again, I'm not a full-time YouTuber. That's actually not what I do. And there's only been a short time where I've been able to carve out near full-time work on YouTube. So bear with me. I'm getting to it. Privacy chats, though, privacy interviews with privacy developers, I will always make time for. And that is an ongoing commitment. So Ergo, getting into that deep dive. Beam is still it's still around. I did that interview with their lead developer a couple of years ago. That's on deck to be re-released here on the new home for Mind Your Biz. So we are going to get that pushed into some of the partner publications that have been helping us get views here on the new home for Mind Your Biz, because it's that important, guys. I'm going to be republishing all of those interviews if they have a privacy component. If they're chains that don't have privacy, I'm not interested in airing those again on this channel, but you will see a replay of all those interviews that I did years ago that other content creators are just catching up on now. I think it's important for us to compare and contrast what those projects were saying then to what they're doing now, right? So I do want to have follow-up interviews with all these projects, with the Haven developers even, because I know that, like I just said, they're circling the drain, but I want to hear from them what they're working on now. I want to see what they're actually doing now to maybe salvage their project. But same with Beam, same with Grin and some of these other projects that are worth taking a look at now. Conflux also another possible real contender in that space, and not just because of market cap, but because of programmability. That's the big thing, guys. Cut to the chase there. Zano, I think, is a strong offering by way of privacy by default. It does not have the same market cap as Monero, but it does do some things that are very unique. Among them is, let's scroll on down to those projects where it's profitable to mine it. There's only a couple, right? But it uses ProgPoW-Z or ProgPoW-Z, and they were one of the first crypto notes to adopt the ProgPoW algorithm. And I've had my criticisms of ProgPoW in the past, but I've come around to believe that it's fine. It has shown decent ASIC resistance up to this point, and with Ethereum moving away from proof of work, it might be enough now. Not for the Ethash coins to move away from Ethash, but for every other coin that may be interested in having ASIC resistance to jump on board with ProgPoW now, right? Just go all in and make it as memory hard and make it as math hard as it needs to be. RandomX has worked pretty well for Monero, but it has created a botnet problem that I think persists to this day, right? We're going to continue to see what Satoshi called zombie farms. We're going to keep seeing those on Monero into the future for as long as it maintains that CPU mineability only. So that, unfortunately, because of that commoditization of the hardware, makes it a problem for profit as well. GPU mining seems to stay in the profit, even when CPU mining is not. And that's validated here in our portfolios, guys. So Firo as well, another decent competitor. And I've already talked to Ruben Yap. We will be scheduling a follow-up interview. And so look for that very, very soon. Again, guys, this is the stuff that I want to bring to you that I think is valuable. And that's why your support is so important. Appreciate that in advance. But our hard drive mining portfolio, what do we got? What's in the money? What's not? Everything is in the red by way of total, by way of long-term profit and loss statements here. Chia is 95% down from its from our entry point, not from its all-time high, but from our entry point. So I don't know. I don't know if we're going to see $15 Chia. I know the Poor Investors has talked about that. He really wants to see $15 Chia. Frankly, I do too. It'd be cool. Get an entry point, but I don't know if that's going to happen. I'm not sure that that's going to happen. So maybe we go in and take a position in Chia sooner than later. We'll see. I'll be public about whether or not I do that, though. CPU mining portfolio, we've got Epic Cash and Raptorium, the only ones that are in the lead there if you're just mining on CPUs. Now, Raptorium, after they've rebased to the Dash code base, they do not have privacy as by default, or privacy as a primitive in their stack, and that's fine. They were meant to be a public ledger system. They had as a stated business purpose, as a stated purpose for their chain existing, supply chain management. So with supply chain management, you don't really want to have privacy built into that. Supply chain management does need to be public because you can do supply chain management publicly without it being anti-competitive. Now, if you want to add ledger pieces there, if you want to add payments and from whom, you may have some problems. But just tracking the life cycle of a product, that shouldn't be as big a problem on chain. So Raptorium, not your privacy chain. It's okay. I like the team. They're really well-meaning, and they have a very clear idea about what problem they're trying to solve. They're just not trying to solve for privacy. It's that simple. Epic Cash does. It does solve for privacy. So it's exciting to see that they are still in the money based on CPU mining. And I think we need to probably, over on what to mine, we probably need to figure out whether or not that can be profitable. I'm not even sure if it's going to be listed here, right? So we'd have to look for that over here. So yeah. We're probably have to search for it though. Yep, not even listed here. So we wouldn't even find it there. Possibly on MinerStat is where we might find that one. And yes, I'm doing a live search. I realize it's always a risk, but minerstat.com. And here at MinerStat, look under our coins, go into Epic Cash. There it is. And it shows us random X. Low volume. Low 24-hour volume means it's rarely traded on exchanges and hard to sell. Oof, absolutely destroyed. So wrecked, not even funny. And it looks like on the CPU mining side for the random X algorithm, it's not as profitable as you might think. So as a long-term hodl, yes. As daily profit, maybe not, right? You're looking at a fraction of a penny for every 100 hashes per second on random X. Let's also take a look. Random X benchmarks. We're going to go ahead and search again. We are using the SEARX search engine. So we're doing this live again. XMRig benchmark. Cool. We're going to use XMRig because it's as good a mining software as any for random X. Oh, this is cool. Properly scaled. I love it when sites are actually responsive. So you can just go ahead and scale up the text and not have everything break. So here we are, Epic, very top of the list. Maybe we're not going to have a 64-core Epic processor, though. Maybe we should kind of distill this down into, or just go down the list and look for something that is a little more accessible for the average at-home user. Got Epic 24-core, Xeon, Ryzen Threadripper. Some people might have a 3970X, maybe, but I think more people are going to have something along the lines of a 3900. So why don't we look for that? I thought we could search. Chance to search on page, I guess. 3900. There we go. 12-core processor, Ryzen 9. This is something that is a little bit more common in most people's workstations. Now we are looking at... All right, so... Come on! Give me the info that I need. Not the info that you want. All right. So single thread. Oh, we don't want single thread. All right. Oh, there we go. It is kind of showing us, yeah, how that works. The hash rate is currently at 17.5 mega hash. So we can use that over, oh man. Thanks, benchmark site. You managed to almost crash Chromium for me. That was truly impressive. All right, so 17.5. Now, we don't have our power consumption set up right now, and I don't know that matters just yet, but we're again going to go to 14 cents per kilowatt hour. Yep, we're going live, showing you how to calculate profit here. Now, 24 hours, you're looking at over $1 a day on a single CPU, right, that you might have lying around. And this is a CPU, which, mind you, costs less than the average GPU that we've been looking at over on What to Mine, right? We're looking at under $400 all in, under $500 when you consider a brand new motherboard as well, and then very low memory requirements. I think 8 gigabytes in total is the system requirement in order to mine RandomX. So you can get an 8 gig stick of RAM, throw it on a motherboard, not even have a GPU, and mine this coin. So every 7 days, here you go, $8. It's not bad at all. Let's. I'm going to pull up a calculator. You won't be able to see this, but pull up a calculator and go ahead and find. If we take for granted that our entire system is going to cost us about $5,500 to create, with a very low power PSU and some RAM. So divide that by about $8, and we're looking at 86 weeks, or 68 weeks rather. So also not awesome, but let's do that again and divide that by our daily profit of 123. We're looking at about a 447-day break-even point on that. So break-even point, yeah, on that particular variant of RandomX is pretty good, but we've got problems with its sellability, right? We're not going to be able to get that sold as fast as we want. But back over to RandomX. If you're looking at CPU mining, guys, RandomX, we've got nice hash RandomX, which is returning some money, and then XMR, which is a better way to go in my mind, right? Far better. I think XMR is still the king of CPU mining because it's got that long-term prospect. It's got that daily volume as well. With that same, right, cost basis and same hash rate, we're looking at profitability every 24 hours of about 46 cents. So, it's not telling us, what am I talking about? Yeah, we don't have any costs associated with it at all. So let's go ahead and pretend like we've got all the way up to 300 watts power consumed. We don't, in reality. That's not actually how much it's going to cost. So we're going to need to actually adjust for the power consumed. And we don't have that listed here. That's really funny. And even that 17.5 hash rate is kind of an optimal hash rate for what we had there. But anyway, very, very interesting to see that Monero is still something that can be profitable. Neoxa has been on our profit lists for some time, and I just see the Deadwood saying this. Neoxa keeps listing for my cards as number 1. So let's look that up over on What to Mine as well, guys. We're gonna stay a little bit heavier on the Q&A today, go a little bit longer than usual, and add as much value as we can over here. This is, I think, one of the best ways for us to do that. I want to jump back over to our GPU mining portfolio and make sure that we actually have Neoxa in here. I think that did we list it? We did not, and we need to. Nope, you need to. There it is. Added to that lineup. Well, it's taking its time to add it to the lineup. But yep, Kapow, so direct fork of the proof of work that's done by Ravencoin. And that might wind up being one of the more profitable coins to mine as we make the switch. Clearly listed by TradeOgre as well, which to me is huge. It's a big deal, guys. Very big deal over there. Much prefer that to anything else. And jumping back into the relative values for those older cards, right? So a 4 gig Polaris card. So a 4 gig RX 480 or 580 is going to give you about 15 mega hashes per second on Kapow. Not at 512. You're going to get it somewhere closer to, we'll say, 145 watts. Put that back up to 14 cents per kilowatt hour. Get an actual pool fee because there's no such thing as free mining, unfortunately. So there you go. Let's go ahead and calculate with those numbers. That should be enough just to get started right now. And we're looking at a daily profit of only 13 cents on those older cards, but there is a profit. That's the thing. There's some profit, even those ancient cards. So on newer cards, you should be even more profitable. Looks like YouTube is throwing an error code at me, saying that it's not quite getting me enough packets sent to me, but I see very clearly that I have a solid over 7 megabit per second stream that's being sent out from OBS. Let me know in the chat if you see me or if you don't see me or for being interfered with by YouTube. That could be happening. All right. All right, guys, CoinGecko. Back in our portfolio, we don't have an entry on Firo or on Neoxa or Gemlink just yet, and I'd kind of like to add that to be able to compare apples to apples. Take a look at its launch date and see kind of what the fundamentals are here. Looks like it's got 21 billion total supply, and it's got a significant number of millions already minted. So I don't know the fundamentals there at this point. Let's see. All right, so Latrell confirms, looks good over here. The Deadwood says, oh no, I see everything fine. Cool. Well, thanks, guys. I appreciate that. It's just YouTube being YouTube, and that's just fine. You can do you, YouTube. I'll go to Texas. You can go to hell. He says, streaming on YouTube. But we got TXBit and TradeOgre, the two top exchanges that are listing this new asset. I'm going to trust the numbers coming out of TradeOgre because it's got it paired against Litecoin, and that just makes the most sense for the atomicity of this coin right now. It's just a very low fee coin, so it makes more sense to pair it against Litecoin or Doge than it does against Bitcoin or Ethereum. But TXBit is apparently denominating it in US dollar values, and it's got 94% of the current trading volume, but that could very well mean that it is manipulated and that you've got wash trading going on there to prop up the price. Again, I don't know enough about Neoxa to speak about it confidently, and I need to know more. It's only got $1 million market cap. That is not good. Guys, it's not enough. Just the market cap alone tells me that it's not enough to sustain all of us mining. If anybody is mining at mid-scale, there's not enough going on with Neoxa to be able to support most of the ecosystem right now. So that's a bit of a bummer, but that's just a reality. But some of us could. These kinds of like really crazy dips right there also kind of signal some potential manipulation as well. Now, I'm not accusing anybody in the Neoxa like core leadership of doing this, not at all. But I am saying that kind of weird volatility is a bit of an issue, and I think that somebody somewhere has a large bag that is being wash traded heavily on TXBit. I mean, I'm sure of it. You've got almost 25% of the entire supply right now, the entire market cap being traded daily on this exchange, back and forth between USDT. So it's one of those signs of manipulation. Does that mean it can't make it? No, it doesn't mean that it can't make it, but it does mean that it's being kind of messed with right now. So I would definitely be cautious about that. Be very, very cautious with Neoxa. The fundamentals, just looking at the chart, are not there. It's one of the few that is only $1 million. And I said, what did I say about Conceal? Circling the drain because of that market cap. I kind of don't want to put an entry into this for the long-term hodl because I don't think it's a safe long-term hodl. I need to know more about it before I can say anything more about it. I don't want to like be a fudster either, you know. But it's there in the GPU mining portfolio now. Let's jump over to our ASIC mining portfolio and take a look at the profits there. I think that Litecoin and Dogecoin are the unsung heroes at this space right now. Appreciate you saying that. The Deadwood, he says, this is killer information, sir. Thank you. Yeah, guys, this is just my method. I mean, this is how I'm zooming out. This is how I'm trying to take, this is my version of macro analysis and fundamental analysis for cryptocurrencies. And I don't use, really advanced trading view tools. I don't, you're never going to hear me say like, whoa, we see a definitive cup and handle formation here. That definitely means we're going up or we're going down. Like, screw that. My crystal ball can't tell you that stuff. I very much mistrust most people who talk like that, with a rare exception of one or two. Wendy O, but even Wendy O is doing less of that, and Tom Crown. So Tom Crown, if you're in the audience, man, you know I love you. But yeah, that's one of the few people who I actually trust on that. And that's why he limits what he talks about to only a couple of assets, not everything. So yeah, you got to specialize a little bit. This is, I think, more of my specialty. Dogecoin at a $9 billion market cap ain't going anywhere. Litecoin at a just under $4 billion market cap ain't going anywhere. And you, with your S-Crypt miners, are mining both. You're merge mining both, right? So if you see profits on that, probably a decent thing to continue mining. On that note, jump over to the ASIC mining tab here. And I wish that they just had like some presets. It'd be so much easier to just do presets there, because now you got to deselect all this stuff. Let's just say L7, right? The Deadwood says it shows what to mine isn't always the best advisor. Due diligence is. Hey, yeah, I appreciate that. You're totally right. You're totally right. What to mine is just a starting point, and it's always been just a starting point. You got to figure out what the best thing is for you. Man, do any coins even use the original Crypto Night? I guess there's some, right? There's Bytecoin. So weird to me. I don't understand that at all. Jump over to ASIC mineyour.biz.lol. And I apologize in advance. There's no dark mode for this site. And with the algo, we want to have S-Crypt. Cool. The L7, right? Antminer L7 is the current top of the line. It's going gangbusters, guys. $17 a day at about 9.5 gigahash. So we can put that into our what to mine over here. So 7.5 gigahash. Let's go ahead and find out what our power consumption is. Looks like we're at just 3.5 kilowatt. It's a hungry boy. We'll just round that to exactly 3.5 gigawatt. And we're going to move our averages over to 7-day. Both averages to 7-day. Why? Because your guy, Mind Your Biz, does not do high-frequency trades or high-frequency sales. Are you selling your coins every 24 hours that you mine? I don't know anybody who does. So 7 days is like, that's like a minimum for averages, in my opinion. If we could do an average profitability for every 2 weeks, I would do that instead. But 7 days it is. Volume, we still want to see at least 1 full Bitcoin of volume, possibly 5 full Bitcoins of volume on exchange. And then for power, because this is an ASIC and you're pretty much setting it and forgetting it, I'm going to keep that cost at 8 cents per kilowatt hour. We're going to keep our story straight there based on how we define mining for Bitcoin as well. Scroll on down and you see that you are profitable on both Litecoin but especially Dogecoin. It's kicking butt on Dogecoin right now. And then on NiceHash, of course, you can mine for the plebs and you can earn a lot more if they pay you out. Boo. I wish that were not the case. What you can possibly do instead is go to miningrogrentals.com. Let's do this as well, guys. Let's jump. Yeah, hash rate marketplace. This is your alternative to NiceHash. Start renting now. I've got an account here. I'm just not going to do that, but they accept all of these as payment, and you can get paid out in all of these as payment as well. So they can pass through their Ethereum payments, Bitcoin Cash, or Litecoin payments to you, or Bitcoin directly, the way you might get paid out over on NiceHash. The difference is you're renting directly to somebody that you want. And you can leave your rigs running with a fallback mining pool that will let you mine the other coins that you want to mine if your rig is not being rented. So merge mining, though, between Dogecoin and Litecoin is going to only yield you just under $9. Get that extra bit of meat on the bone when you're renting out to other groups. Now, the mining profit they're showing here on ASIC miner value is clearly at a lower cost basis for your power. So they're likely trying to show you what it would be like to mine on 5-cent power. Let's see. Yep, just about. Yeah, that nails it. 5-cent power gets you there. Gets you a lot more daily profit. And it just shows you how important that cost for power is. But here we like to talk about what is accessible to everyone, not just the privileged few. And I want you to be in direct control of your mining rigs. I don't want you to send it to a co-location facility. I've talked about that in the past, and I've recommended that people try that in the past, and I've come to regret that. Basically, every time I've come to regret ever talking to people about co-locating, unless you're talking about just you and a few friends renting a warehouse. That's co-location I can get behind. And I think maybe you can find that group of friends in your own personal sphere of influence. But Nah, some person who you don't know who's asking you to ship your rigs out to like Canada or, heck, out to Asia. Don't trust it. Don't do it. I wouldn't do it. So anyway, but yeah, that's on the averages, guys, right there. On the averages, that's how it's going to work. But yeah, at 5-cent power, it makes even Verge look profitable. But of course, it makes everything else look more profitable, even NiceHash. So yeah, that's the full story there, guys, on ASIC performance. I do think Dogecoin and Litecoin, yeah, they're the unsung heroes of this portfolio right now. They are more decentralized than a lot of their competitors. They do have better privacy add-ons than some of their competitors. Litecoin with the MWeb extension, but is that enough? I don't know. It might not be enough for me to feel like it's really worth focusing on for very long. While we're on my ASIC miner value, we may as well do the deep dive. All right, so let's take a look at the iPollo V1 ETH, man. Would you dare buy an ASIC for Ethereum mining right now, even at $125 a day? Would you dare do that? Like, yeah, I'm going to red screen you, because that's definitely not financial advice. I wouldn't go there personally, but maybe you've got the guts to try that. Maybe you're just ballsy enough to be like, yeah, you know what? Throw caution to the wind, buy one of these things that's going to get me, right, like between $125 and apparently $78 a day, and go spend $20,000 on it. Yeah, that sounds like a good idea to me. Like, is anyone here that crazy, really? I mean, I know we're a crazy bunch, right? We're kind of a salty group of weirdos, but like, yeah, that's some risk. Do you also like, driving your bullet bike, your motorcycle without a helmet, right? Doing stunts and like tricks on the freeway? Because if that's you, then maybe you like this. Maybe this describes you. I don't know anybody who's like that. And anybody who I've known who's like that is not alive anymore. So I think the same would be true for you as a miner. But that's the top of the profitability list right now. Next closest is ETH and ETH for ETH ETC, right? Dual miner, the Jasmine X4. This is starting to make more sense to me because you got profits that are denominated in Ethereum Classic, right? With a ETH Classic algorithm, right? That slight adjustment to make it possible for you to mine there. But you're looking at the same, right? The same cache layout to make that happen. ROI looks good right now if you maintain that same amount of dominance on the Ethereum Classic network. But, I've been saying for a while, Ethereum Classic might not, I don't know. With my experience on the Guerli testnet, doing it's sort of like test merge with the Beacon Chain testnet, or the testnet Beacon Chain, I'm starting to think that maybe Ethereum Classic does stand that fighting chance of becoming the dominant chain. Like, Ethereum Classic, Ergo, they might be better candidates than I thought prior. Because when you have people seeing like, oh, my stuff is breaking on Ethereum, where can I port my code? Ethereum Classic kind of does fit the bill, right? But there's also a really strong risk of the answer to that question being Polygon, unfortunately, right? Like, you can like it or love it, but you can't really hate the fact that Polygon actually has captured a bunch of interest from developers, more than Ethereum Classic has. So if people are saying like, oh no, this new proof of stake version of Ethereum isn't working, I just need a version of the EVM that works. I don't care if it's proof of work or proof of stake. If that's what you're saying, the throughput and the fees on Polygon are already more attractive than Ethereum. So is it possible that we're going to see the ETH Beacon Chain merge be the best advertisement for Polygon that it's ever had? I'm suspecting that it will be, but I'm not ruling Ethereum Classic out now. I'm starting to think more seriously about Ethereum Classic possibly becoming the new de facto Ethereum. Gandalf Gray says, mind your biz, couldn't the same thing be said every other time mining shifted? Bitcoin, then Ethereum, none of these were profitable at first. If no one mined them, then there wouldn't be big miners now. What am I missing? You make a fair point. There did need to be miners that were involved when they were not profitable, and there were miners that were involved when they were not profitable. But actually, so I appreciate the question. What actually happened, though, was that the markets shifted. You had these mining rigs that were in expensive markets being right-sized or being offshored into low-fee markets. Like you got Venezuela, for example. Just one like kind of relevant example where you had a bunch of mining rigs shipped out to these areas of Venezuela where you had fully subsidized hydroelectric power. Like you've got significant numbers of shadow mining operations in territories like Venezuela because of the cost of hydroelectric. So they were able to continue when you had miners that were even in places like Spokane, Washington, with really like the legendary 4-cent power in 3.5 and 4-cent power in Spokane, Washington, when they were like, no, we got to fold. We can't afford to maintain business operations. Our operating expense is too high. Like when you're mining at scale, you cannot mine at a deficit for 6 months. But we had 6 month stretches where it was not profitable for some of these mines to continue operating. So what they did instead was, okay, we're either going to ship our mining rigs out to some, associated company, some affiliate company out in these low fee markets, or we just have to sell our equipment. Like we're done. We have to fold this business and we got to try to liquidate, and whatever, like liquidate our holdings if necessary to continue operation or to just close up shop. So that's what actually happened. Like you would think that, yeah, more people were mining than, and that's how it stayed secured, but that's not what happened in reality. You had several mining operations just fold. So yeah, like at scale, no, it didn't happen at scale. You had some groups that were able to operate at scale because they had the most inexpensive power in the world, and everybody else like really got damaged and had to sell off. It made the strong groups that much stronger because they were able to pick up equipment cheaply at cost, even or below cost, when they got to that point. So yeah, you're right. Proof of work changes do create some issues in that way. It does. It's a shifting landscape, but that's why so many institutional groups for mining have why they were created in the first place. They were able to buy cheap mining gear in the last bear market, and then they thought they could create a business that would potentially be resistant to low fees in a future bear market, but mostly they made a killing in the bull market, right? And now you're seeing like the tide's going out, and now we see who isn't wearing swimming trunks, right? So those groups, some of them are folding because they aren't going to be able to make the transition like you're talking about. So yeah, crazy times. And the same is true of small to mid-scale miners too. And sometimes they're broadcasting on YouTube and talking about how they have to shut their rigs off because they didn't plan correctly. They reinvested capital that needed to be a profit margin instead, right? To be able to pay for future operational expense, not new hardware, right? That's the problem. They overbought hardware, didn't do the basic math of figuring out this is my burn rate. I need to set aside this many months of my burn rate because if I don't have a business anymore. Wrecked. Rest in peace. But yeah, I hope that's my take on it anyway. Gandalf. That's so if you think you're missing anything, like I don't think you're missing anything. I think that some people just don't plan their operating expense out long enough to be able to continue in business. So yeah, the X4 miner though, it might possibly be an option here. Get this out of the way. And then the Antminer E9, I don't know about that. Anything that's ETH hash that's coming out right now, I'm just like, no. A10 Pro, A11 Pro, yikes, no. The Gold Shell KD Max, I know this is not so much in my wheelhouse. I don't talk about this sort of thing very often. I think that Vosk has really gotten into this because this is something that, where he's able to do like co-branding and stuff. And, he likes being able to sell products, and more power to him. He's done really well. This is not usually what I talk about, right? But yeah, looking for anything that's sort of an alternate chain is probably a better way to do it. And with Cadena, yikes. $11,000, $12,000? Come on, man. No. Yeah, for still an over 540-day break-even point? Come on. Who's going to do that? Right? Like, really, who's going to do that? The L7 is, for me, it comes to mind as one of the most like reasonable pieces of equipment to get into, or anything that's mining Scrypt, because Scrypt has maintained that high profitability with merge mining. And you've got that ultra high market cap to be able to sell into if you need to sell into it. Your selling pressure as an at-home miner or a mid-scale miner isn't going to mess up those coins, right? Or those networks. And like I said, as far as the dog coins, right? Like, I think that Doge it's the king of proof of work meme coins. There's no disputing that now. I mean, it's been frustrating a little bit for those of us who are like, the fundamentals aren't there, but the fundamentals are there. It has the same fundamentals as Litecoin, give or take. And it can port all the fundamentals of Litecoin. It's already got double the market cap to do it. So there is development funding there if we need it. But yeah, stop it. Jumping back into our portfolio. Back into our portfolio, guys. That's why I wanted to take that little detour to talk about Litecoin and Dogecoin a little bit more in depth. The privacy coins like Horizon to a much lesser extent, but Grin, Bytecoin to a much lesser extent, Pirate Chain to a much lesser extent, and others, they might make sense also going into the future. It's great to see Pirate Chain at that $85 million market cap. Maybe it's going to make it. But we would need to see light clients from there. I talked to Draith from the Pirate Chain project a couple of years ago. Do you want me to bring somebody else on from the Pirate Chain community? Because I will. Guys, that's what I'm offering. I think it's the most important stuff right now. We'll do all the clickbait thumbnails and we'll make it look, all pretty to try to get the YouTube algorithm to give us more love. But I want to bring that back. It's been just long enough. We interviewed them during bear market conditions. I skipped them during the bull market because when it's bull market, guess what? Uncle Seth goes pay to play. That's what I do because that's just how the rest of the market is. And I make no apology for that because, again, as a business, that's how you maintain profit so you can stay in business. Yeah. Oof. Did I just let go of just reveal the strategy there? Yep. But not for the faint of heart. That's ASIC mining portfolio, FPGA portfolio. Cardano is the only one that's still in the money. 0x Bitcoin, it's doing its thing. Really low market cap though still. As far as market caps go, let's do a stacked ranking there. Digibyte and Telor are probably not going to go anywhere. Handshake, we already noticed that. I already mentioned that they have their domain names available over on Namecheap.com. Now, I don't have an affiliate link in the description. Probably should get one, but I use Namecheap pretty frequently. A lot of people in the industry do. So to have Handshake, HNS domains available there, pretty strong offering. I still don't know why it hasn't completely run off with profitability because of that one bit of news alone. Probably not submitting the correct press releases for that kind of news. They should. Avalanche and Solana are still at the top in terms of having profit. I don't think that's going to last for super long. Cosmos Hub and others. Oh, you know what? I'm just realizing, guys, I want to make sure that I am not completely ignoring. Yeah, no. Ooh, am I ignoring? No, I'm not. Woo. Had to double check my calendar, make sure that I'm not completely putting consulting clients on hold. They're like, hey, where's this guy? You're supposed to talk to about this thing. No, I'm live streaming. Gosh darn it. Leave Uncle Seth alone. So, yeah, back at profitability here. Guys, Avalanche and Solana, I do not have big faith in. It doesn't matter that they've maintained a positive P&L in our portfolio here. Cosmos Hub, Phantom, BNB, Tron. I'm just going to delete those top entries there and just start from here. Cosmos Hub, there you go. It's been doing the best of all of the other projects, and I think that it's still kind of the sleeper in terms of the interoperability play. You got projects like Evmos and their bridge that got hacked, but they do show a lot of promise. You got projects like Kronos, right? That's developed by the Crypto.com group that gives you a bit of an EVM to IBC bridge. These are delivering faster than groups like Polkadot. Polkadot has more funding. Cosmos has more use case right now. And in my opinion, more velocity, more things happening, more things being developed that people are actually using right now. So good to see that it's there, top of the list. Polygon is pretty low on the list as well, but it had everything that the EVM chains should have. So I won't be shocked if people start building on it. But you already know that. That's my take as well. ICP is not low enough. I could stand to see it go lower. Kusama also way down. So if you're interested in buying, maybe it's still a good time to start averaging in. I won't be though. Junk drawer is where we've actually seen all the performance, guys. This is where we joked about it when we were in the bull run about it being irrational exuberance, but here we are with people still in the profit, people still in the money. So if you were looking for something to hold, meme coins have totally won in this cycle. It's safe to say that now. As we're seeking bottom support for a lot of different assets. Latrell says that Cosmos has a Flux parallel asset coming. Well, here's kind of the issue with that. In the Cosmos ecosystem for IBC, it's indicated that you should have your own app-specific chain. So I want to dig more into that news, because if that's true, in my opinion, that's more relevant than most of the other things that Flux has developed. But it also puts them in an awkward position of competing directly with Akash Network, who already is an app-specific chain that does a similar service, right? It does similar solution to a similar problem that Flux Network does. And I had Greg Osuri and Dan Keller agreeing to do a friendly debate on my channel a while ago, but Dan Keller backed out. So if anybody wants to snip this out and to get me to invite Dan Keller on again, Dan, please change your mind. You're now entering their territory. You are a minnow, they are a shark. Akash is in the Cosmos ecosystem. You should take me up on that debate. It behooves you to take me up on that debate, because you can help clarify some stuff and you can figure out how to build amicably in that ecosystem with your competitors, instead of getting eaten alive because you are a minnow and they are a shark. So that's just my take on it, guys. Make friends early and often. But scrolling down the list, it's kind of funny that, again, meme coins and then Ampleforth randomly rebasing and becoming more profitable in that same time frame than Hex was. That said, if you're a fan of the mission and vision of Hex, negative pricing doesn't affect you, right? Like, low pricing is not scary to you. Same is true of any asset, right? Uniswap, down bad, but here's the thing. We all got it for free if you used Uniswap. So, you're welcome. DeFi Yield Protocol, a lot of the other ones, Sword Chain as well, which is starting to show signs of centralization and sort of control that I don't like. They talked about being a decentralized exchange that would support privacy coins like Monero, and they've kind of backpedaled from that position. I don't like that. So maybe I won't be talking about them much more. But they're here in the portfolio. And then biggest loser by way of profitability is going to be Akita Inu and the old QuickSwap. The old QuickSwap is finally losing a lot of its value. I think new QuickSwap, is even lower. No. But we don't have P&L listed there. So it could be a little lower, but I think old QuickSwap is a little bit lower in value. So bummer to see that. But Maximus DAO, Hedron, Fame, others, we need to pay attention to some entry points to put those into the portfolio. I think they'll be interesting to see how they do as we return to profitability. Because right now, with low fees everywhere else, or low pricing everywhere else, Floki Inu would still be giving you like a huge amount for your money invested. Like, you're still in the money. You could have completely spaced it, right? And not sold the top at all. Woken up today, caught your marbles and been like, oh, do I have a Floki Inu bag? Oh, cool. I've got money. Who can say that? Like, none of the strong fundamental projects can say that. So it's crazy that these joke meme coins can, right? Like, there you go. It's like a $98 million market cap on this joke token that somebody minted, for like a few bucks on Ethereum. Dang. We should all be so smart as to make these. Like, why have I wasted my time mining? Right? That's always the big question. Why did we waste our time mining? We could have just all made joke tokens and been rich this time last year. IBC gang. I kid. Obviously, I kid. Everybody's got a moral center. Everybody's got their own standards. IBC gang. Yeah, Cadena, the only one that's in the money, and then Cosmos, Atom itself as a top contender there. Secret right behind it, which I love seeing because it's got that privacy by default, got a privacy layer on it. And then biggest loser is Luna Classic, of course, and Persistence, which is kind of a bummer because they created such a great ecosystem for others to build on. A lot of the newer chains that launch in the Cosmos ecosystem actually use the Persistence API. So kind of sad to see that they're successful and then their price is just like really suffering because they succeeded in giving other people tools. It's kind of the problem with the fee system in IBC, though, which also is why I'm curious about how Flux is going to manage to do a parallel asset in the IBC ecosystem. 10 set gems, everything is down pretty bad. And again, I talk about that pretty frequently. That makes me sad. I want to see them come back up. Stables also, we need to know what's happening with stables. Any outliers here, any problems here? Well, Terra Classic UST is, or Terra Classic USD is obviously having a problem, but it's coming back up to 2.5 cents. So, wow. I mean, looks like it's supposed to be a stable coin, but clearly there's an arbitrage opportunity on this chart. Let's take a look over the last 14 days, what it looks like. Yep, you could have bought this asset at 2.2 cents, and you could have sold it for as high as 3.2 cents in the last 14 days. Last 90 days, let's see where that opportunity was. Yeah, when the volume was low, you were at 0.7 of a penny, and you could have sold all the way up at, wow, a 10x. You could have sold this so-called stable coin at a 10x for less than 10 cents. I don't even know what this is anymore, guys. This is just making me crazy. Liquidity USD is having a bit of fluctuation there as well, but Liquidity is such a strong over-collateralized stablecoin that it appears to be trading at over $1, right? It's doing really well, actually, and getting close to the $200 million mark in terms of total market cap, which is nice to see. But $1.03 right now, recently, in the last 24 hours, down at 1 cent or $1.01. But 102, kind of consistently up at 102, 103 with that over collateralization ratio. It's funny that it's not getting a perfect peg, and I'm wondering where the Oracle data is coming from there. But as you can see, all of the volume is on chain. This is except for Gemini, right? A little bit of volume on Gemini, not quite as much. Quite a bit of depth on Gemini, but not as much volume. Most of the volume is literally just a stablecoin pair between LUSD and DAI. That's 20% of its total volume there. Let's see if we can get it. That does open us directly up to the chart. No, it's swap. Come on, man. I want to see the chart for Uniswap V3. That's what we're really looking for, guys. So let's search for the pool of LUSD to DAI. Again, we're doing a little bit more due diligence, doing a little bit more of a how-to here because I got just enough time to do that, guys. All right, so we're looking all the way down here at LUSD to DAI. There are two different pools for it, which doesn't make perfect sense, but there's a little over $1 million of TVL there and almost $500,000 of volume in the last 24 hours. And it looks like the actual fees themselves, they're not awesome. It's not great. But yeah, over the last 24 hours, it's paying out something. So if you wanted to just have stables that were paying you out, apparently Liquidity USD versus DAI stablecoin is doing all right. So interesting to see that it's also trading above its peg, but also giving a return if you wanted to just provide liquidity for stables only and try to keep a relatively stable position on a decentralized exchange. This is something that people were getting much higher returns for previously, but if you're just parking your stables there while you're waiting to use that dry powder somewhere else, all you have to do is be able to earn more than the price of setting up the liquidity pair. That's it. But you're just parking your stables in a liquidity pair that gives you some fees over the next couple of months while you're waiting to redeploy that capital elsewhere. Interesting prospect. But the same could be true of USDC, Binance, BUSD on Ethereum, DAI, Frax, etc. A lot of other stables that have billions of dollars of liquidity in their market cap. And GPU ETH replacements, guys, we talked about this last time, and we try to basically talk about the GPU side of the portfolio in this way anyway. And it looks like, this isn't telling us anything that we don't already know. Ethereum Classic, Ravencoin, Flux, and Ergo have the highest market caps. Conflux looks like it may be a contender as well in terms of absorbing some of the hash rate. But, and then Zero and Firo to a much lower extent. I'm not too worried about these two taking up all the Ethereum hash rate. Ethereum Classic seems like an obvious place where a lot of that hash rate is going to go. Ravencoin and Flux also, but I just don't think that they're going to sustain really high profit as soon as the difficulty goes up on those networks. I think that these three, everyone's going to say oh yeah, Ethereum Classic, Ravencoin, Flux, that's the obvious place I'm going to put my hash rate. And a lot of people are going to find that in a couple of weeks, they're not profitable at all. For certain size operations and at certain cost bases for power, that you're just not, or bases for power, you're just not going to feel like it makes sense for you. Ergo might make sense. Conflux might make sense. And they might be a little more sustainable in terms of their profitability. Maybe because there's a little less of a focus on them. But same will be true of these as well, right? Where it's like, you can see this oddball profitability spike on like Zono and Epic Cash and Beam and stuff because nobody's mining them as much. But that's my take on it, guys. Been a longer live stream. Appreciate your support. This has been a little bit awkward, this transition, guys. I'm not going to lie. It's been kind of tough making this change over to the new channel, but I'm committed to doing it because of what we're building here and the fact that we know that some of this stuff is more valuable. And it's not just me tooting my own horn. We know that some of the stuff that we talk about in this community is more valuable than what some of the other large channels that only talk about one thing have to offer. So I knew I needed to do take dire action, like massive action, and do something a little bit different. So that's why we're doing this. Appreciate your support, guys. And thank you for watching all the way to the end of the video. You're the reason I make this media. I love your face. Remember to stay private and mind your biz.